This webinar is proudly brought to you by IG South Africa. Visit igmarkets.co.za to open your trading account today.
So today Warren's looking at Fibonacci retracement projections, Fibonacci being the mystical sort of sequence of numbers that appears pretty much everywhere in nature, in trading. I think I saw some of my cappuccino this morning. But with that, I'm going to hand over to Warren. As always, questions are welcome. Throw them in the Q&A box. We'll take questions at the end. Warren, all yours.
Thank you, Simon. Good afternoon, everyone. Okay, so Fibonacci is a sequence of numbers. I'm not going to go through all the math behind it, but the idea is that when applied to the chart, it gives us alternative areas of support or resistance. And the basic concept is to take, excuse me, one impulse move, in other words, a long trend like we can see here on Telkom. If I take it from the bottom to the top, I then get potential support areas on the way down. So it splits a price move into a percentage. All right, so just to give an example, I'm going to take this from relatively simple to a little bit more complicated later on. Let me just move this thing out the way. And all right, so the basic idea is, why has Telkom stopped where it has? And it is an interesting point. So if I start by taking my fib from the bottom to the highest point, so from the lowest point to the highest point, in the price move I'm interested in. So I'm not at this point interested in historical price moves. The current impulse is from that low point to that high point. I take the fib, I draw it in, and what I see is a 38% retracement first. So that would mean that distance from the top to this first line is 38% of that entire price move. Okay, that's all it is. The middle line is a 50% retracement, so that's halfway, and then the bottom one is 61.8% retracement. So all I want to know is that if, when the price gets down here and it starts to find support, that would be important. There's no ways that I'm going to use these three levels as targets for a down move on Telkom. All right, so that's the one mistake many people do make. They think, okay, fine, Telkom's got a lower high, I'm going to short it, and I'm going to short it all the way to the 38% level. We do not know if it is going to go to that price of 57 Rand. All right, so we're always working in the unknowns, and we're trying to trade with probability on our side, as there are no certainties. So all it does is, if the price does start to drop, at what level can I expect support? So that's the first thing. So impulse move up, price is coming off. If it gets down to 57 Rand, that is the same as a 38% retracement, and I'm interested in looking for a turnaround for a buy signal. The other question is, Telkom has stopped at this level, 85 Rand 73, and it's made a lower high. It is currently on support. That's yesterday's closing, and all I did is I just went back in history, and we go to the all-time high here, way back in 2007, and I just take a fib, and I take it from the high to the lowest point, which you can see over there. And the first thing I notice is that the price has hit a 38% retracement. So I'm measuring the impulse move. Sorry, let's just do that again. I'm measuring the impulse move from the high to the low. I've split that up into segments. The first segment is 38%, and that should offer me some resistance. And that's exactly what has happened. Now, that doesn't mean, again, that we just go and short the market. We use other technical analysis to actually make the trades, but it is great to see the fib acting as resistance when I get a sell signal onto Telkom. So that's one way that I use them, is on major moves. These are big cycles. Major moves, it is interesting to see that the 38% has offered a level of resistance. Then I can go and say, okay, fine, if a moving average is crossed over or whatever, I want to short Telkom. It is a confirmation that that level was a strong area of resistance. Now, of course, as Telkom started reaching that 38%, and you were, let's say you bought Telkom at the bottom down here, you bought it on a trend system, and you've seen it go all the way up, it's made a lower high over here, and you're thinking, well, should I or shouldn't I get out? And the first point is, yes, it's at a 38% retrace. It's going to find resistance there, and you could consider closing the trade out. The next point to buy would be if the price comes down to 38 and gives me a buy signal, I'm going to then go and buy it. So try not to make it too complicated in the beginning, and I'm going to make it a little bit more complicated as we get into it. If we have a look at any of these impulse moves, so if I just zoom in a little bit, if I take my fib from any swing, so if I go from that high, just get it on the chart there, from that high down here, I can see that there's a level of resistance, but it doesn't form part of my three basic fib levels. So 38, 50, 61.8. I use alternative numbers to do that kind of analysis, and we just go in here. There's Telkom, and we zoom into the same level. Okay, so we've got some space now. I take a fib, and these are the numbers that I use. From the swing high to the swing low, there's my fib, and I have some alternative numbers in here. 78.6, and I also use an 89%, so I'm just going to add that quickly. 89 just being a fib number, not a fib ratio. And that's what happens. We can see at the top there, 89 has acted as resistance. There's no other price level, there's nothing else in the way. The 38% retrace that we looked at now was that orange line, and we can see the price came down, it swung up, gave me some dojis, some high upper wicks, some long upper wicks, showing selling pressure coming in on Telkom. And if I just measure that little retracement, I get an 89% level. So the numbers that I like are 89, 78.6, 61.8, 50, 38.2, and 27.6. Some of those are harmonic numbers, and some of them are fib numbers, but the three middle ones are actually fib ratios. The idea here is that if I do get a sell signal on Telkom, let's just take these two moving averages for instance, that sell signal can be confirmed by a higher level fib. Now the problem that we have really with Fibonacci trading, and a lot of the criticism of the idea, is that you can put there's enough lines here to make any level resistance. Okay, so that is the caveat. It can find support to resistance at any one of these lines. The idea is you have a trading system. That trading system has its limitations. The moving average crossover is very late, and it's very hard to find something to confirm it. So then you've got to start using a secondary indicator. So let's say at the top here, you use a stochastic or a MACD, and you get some divergence. Now, if you put the fib on and you have that same level, that to me is just an added benefit. So it just gives me some solidity to the idea that I could be shorting Telkom. The other idea is if I've got a trending system, I can use the fibs within the trend. So if I take my fib and I just put it on this swing high there, so this level is the 100% mark. I draw this down. I get a pullback. The fib is upside down. That would be 38%. Let's just put it the other way around so that makes sense to you. And I've got a trending system. The trend is up. The moving averages are all above each other. The market comes back to the 38% level, and I get a break above resistance. So if you just put in a little trend line there, you would have added. So if I just put a trend line across like that, I've got the 38% retracement here, and the price touched it almost to the cent. It's broken above resistance. That can be a really good trend continuation signal. The averages haven't crossed down to give me an add. So if I shorted some trading using some leverage, the fibs added into your trend analysis can help you confirm breakouts. If that was not a 38% retracement, or let's assume it just stopped here in the middle of nowhere, it's less confirmation. All right, so that's pretty much how I use it on the stock side. I look at the trend, I say, okay, fine, the market's pulling back. I get a buy signal that's broken resistance, did it touch a fib level before bouncing. Okay, so that's another simple way to approach the Fibonacci. The idea is draw as many of these as you can, and after a couple of, I'd say a couple of months, you should have a really good idea of the value that it holds. The downside is you can't actually see future prices. So if I put my fib here, and I'm now saying, okay, fine, the market's has fallen off, and how far up is it going to go? Now you can see here my 89 is at the bottom and my 27 is at the top. So what happens is these ratios are not equal. All right, so what you can do is you can just put an 11 at the top. That would be the opposite of 89. It's not a fib number, but it acts as the 89 just on the other side of the Fibonacci. All right, otherwise you can just draw it upside down like I did in the first place. If I wanted to draw an impulse move from this low over there, and I want to measure that drawdown, you can see here it stopped in the middle of nowhere. So there was no idea as to which way the market was going to go here. Was it just going to retrace a little bit and then drop off and form an ABC, which it didn't do. It in fact pushed higher. Now, so it's not a predictive tool in that respect. It didn't come down to the 50%. It didn't find support on 38. I don't know what to do with it. If my system fires, sure, you're going to make the trade, but I feel a little bit less confident in that whole idea. All right, so fibs certainly do not pick every turning point in the market. That is not the idea. There's no system that does that consistently anyway. So the idea is that if I get a trading signal and I get a fib level, I'm quite keen to get involved in that particular trade. And that was just a look at a stock. And if you put your fibs in on even smaller swings, you're going to get ever smaller numbers. So you're going to get to the point where it's actually useless to draw your fibs anymore. And if I draw one from the top here to that low point, I get an exact 27.6 retracement. So if you had a continuation signal, you got confirmation on the fib. It didn't bounce off support, so this move is not harmonic. In other words, it's not vibrating at a nice, sequential way. It's just bounced in the middle of nowhere, and it's found resistance at 27.6. If your trading system gave you a short, that is a nice confirmation. A little bit of a hint of an evening star at the same place. I find that reasonably powerful, tied to the fib level. So you can see even the 89 price never touched the 89, just hit the 27.6. All right, so that would be the basic idea. There comes a time where the price moves are too small. So if I wanted to measure a pullback here, those fibs are totally useless to me as a trader. All right, on this time frame on a daily chart. So I'm not really interested in doing small little moves like that. If it had bounced up and you could have put your fib in, and you can see here it actually did find support close to 61.8 down there. So, you know, there is support there, but it's useless to us. So try and keep it to the scale of the time frame that you're looking at. I want to measure a big swing, and I want to see a little retracement, and I'm going to short it. If we go onto a smaller chart, so we take an ALSI for instance, and we go down to an hourly chart. Here's the ALSI, a great example here. The entire move, if we look at it like that, let's get a bit more data there, take 3 months. The ALSI came off and started to drop. It found a low, it retraced from the low to a high point, and then continued lower again. Now, without complicating things with harmonics and ABCs, all I really had to do was draw in a fib from the high point to the swing low, and you would have done this when the price looked something like that. So the market's come back, I found resistance, and I want to know whether that is a fib level. The initial one was pretty much the 50% mark, and that sort of makes me nervous to be long. It broke the 50%, failed, but held above 38. So if you did take a long on the first bounce, the stop loss would have been below 38. So you can use these levels intraday to manage stop losses, and you can use it to manage targets as well. But the whole idea was this impulse wave here should retrace as the market moves in threes, pulls down, retraces, and should have one more leg down. And we can see what happened. Market did drop off, came pretty close to 61.8. My trading system fired a signal, but I saw immediately that there was support on the rounding top. So what I'm trying to get at here is trading is not just about one tool, it's about combining a whole lot of things. All the Fibonacci is, for me, is a tool to add to my arsenal to see whether that rounding top has any validity on a fib level. And that 61.8 is a very powerful area. When the market is undecided, 61.8 will often stop the move. And that's exactly what happened. So when price broke through that support level, I was happy to take a short on a breakout simply because the market had gone back to around 61.8 and it had formed a rounding top and it had broken through support. All right, so that's just another way to do it if you are day trading. I do suggest on Just One Lap and on my website there is a webinar on the ABC, AB equals CD, and that gives a lot more detail on the harmonic side of things. But the whole idea is these levels all act as support, and you can see the 50% mark here held the price, then 38 held the price, 50 breaks, price comes back, 38 breaks, we start to get a broadening pattern. The market then goes up to 61.8 and fails. That sort of ends that broadening pattern to a degree. All right, so that would be the basic idea. Then what happens, we take that fib and we bring it down to the retracement. And we can see the price moved up, it came back, so after the top, came back to 61.8, which if we turn the fib around would be 38% roughly. We just do that. And let me get it right. Try and get the fib should be drawn wick to wick, unless the wicks are huge. So if you've got even big wicks like that, I do like to put the fib there, but it's not an important area. But sometimes the bodies are make a bit more sense. So the market comes off, finds support on 38, bounces, comes off 38, holds, eventually hits 50, comes back to 27.6, and you can see that it's range bound before this happens. All that's telling me is that just be patient, just wait for a clear decision. If this market had broken, so if you drew a trend line in, like that, across the tops, if that trend line had broken to the upside, you would have confirmation of a bounce on 50. Okay, so all it's telling me here is just be careful, don't make any rash trades, and don't rush the decision, just wait for this thing to pan out. Once it breaks through 50, I have the 61.8 retracement earlier, I've got the rounding top support line break, and 50%. Okay, so there's now 3 or 4 reasons to make the trade. And this brings me to the next section here, is the fibs are not just about retracements, they also have projections. So we can target future areas of support or resistance. And I like to do it with something called fib clusters. And what I do here is I just measure the impulse move. So if I take my fib from the low point to the high point, you'll see that it extended downwards. I'm just going to change the color quickly so that we can differentiate. Let's just make it red. Okay, so I'm not interested in this mess here. That's not the target here. The price has broken support. So down at the 100% mark, once it broke through that 47,230 level, you can look in history, but I find the fibs a little bit more pertinent in general. And the market on the blue one, I had 2 extension levels, 127.6, 138.2, and then on the bigger move, which is the red one, I had an extension down here of 127.6. So all it's done is it said that's a 100% move, and it's added 27.6% of that initial move onto the lower point. There was no real fib cluster here. It just hit 127 of the hourly chart, larger swing, and that could certainly be the end of a wave C. So we had an A down, a B up, a C down, 127 is the initial target. So it's just the first target. When we see it go up, and fail to close and hold below 127.6, if you were short from up here, you'd certainly be looking to exit and waiting for the next trade. If I make the picture a little bit bigger, we can see there's a cluster down at 46,365. So that would be my next target, and we can see there are two levels on the fibs that make that quite important. So one is 161% extension of the blue one, so the smaller time frame gives me a 161% extension. The red one, which is the bigger time frame, gives me a 38% extension. So that should be, if the market gets there, should be a pretty strong area of support. If that level breaks, then we've got various lower levels, and I'll just give you those numbers now as well. So the extension side of things, I look at 127.6, 138.2, I look at 161.8. I do throw in 150 from time to time. I just prefer the 161.8. I look at 178.6, and then I've got 261.8 at the end of the move. Normally speaking, on an hourly chart, that would be now a total change in trend. So I don't use 261. Anything bigger than 261.8. In other words, this could extend all the way down there. It's unlikely, as far as I'm concerned. The most probable place to find support would be in that 360 to 379 area. That's where my fib cluster is. If I make my chart a little bit bigger, and I'm just going to put a line over that area so that we can clean the chart up a little bit. So that would be my fib cluster, and I'm going to take the blue one and just delete it, and I'm going to take the red one excuse me, and just put it on the prior impulse move. So here we have the beginning of the move. That's the entire impulse. Then we've got an ABC. That C stopped dead on 78.6 retracement of that previous swing high. Now, if you didn't know your fibs, this might confuse you a little bit. Yes, there's some internal, there was a bit of support at this level historically. Okay. But the fib gives it a little bit of validity because it was only those couple of candles that stopped there. So the fib has given us two spike lows, beautiful, on 78.6. If I was short on that, I would be certainly considering cutting those profits and walking away waiting for the next trade. So we had basically three time frames. We had the super long, we had the interim down move, we had the short-term retracement, and then we had two extensions plus a support level giving us the low here on the ALSI. So the idea, guys, is measure the biggest swing, then go down. So when you start doing this, the hard part is deciding where to take the swings from. And a lot of people make the mistake thinking that they need to try and measure at this time. So as we're looking at this chart right now, we think we need to go and measure these small little moves here. That is a pointless exercise. That market action there has nothing to do with the current price action. But that big swing does. That is my impulse move, retracement in a beautiful ABC, which is a classic retracement pattern, found support on two fib extensions and a fib support level. Okay, if you don't have 78.6 in there, you wouldn't see this. So I know some people use 77. There's some people use GAN numbers, 76. It doesn't really matter. The idea is that if I have this interim level, I can pick it a lot cleaner than trying to guess that that resistance is going to become support. Okay, so the idea is on the shares, I can start on a daily chart. I can measure the super long term. Telkom we took from the all-time high to the last low. We measured that retracement. We see that Telkom's at 38% now. If it does pull back, I now have future potential support levels by putting the fibs there. And they don't always tie up with the historical price. And that's why people do struggle sometimes trading support and resistance, because these fib separations actually work quite nicely in arbitrary areas, or people deem them to be arbitrary areas. Most traders would have been waiting for that sort of level to be hit down there. There's three supports and a fourth one. All right, I like to just say, hey, on the fib level, three fibs clustering at the same price. I'm happy to take that as my target. And then just a quick look on currencies because it works here just as well. I'm just picking the Euro US, and I'm just going to draw it in here quickly. We take initial move, so we've got an impulse move. We have a retracement to 27.6. The system fired again. This trade failed, and I just closed out on a close above 27.6. The market then breaks that level again. I get another trading signal to short it. I'll short it again, and you can just see there's a trend line drawn in there. Let's just take that and draw your trend line in. The price breaks through that. It's back through 27.6. Didn't hit 38. Means that there was not enough impetus in the move, and the price has fallen since. And quickly put a target in there. Initial impulse move gives me a nice target. 138.2 is the area that the price is struggling with. It almost hit 161.8 on the downside. If I take my smaller price move, which is the retracement level, I get spot on 261.8. There's nowhere really on the chart that you're gonna get these kind of levels. All right, so I find them really important. Do some practice. You're welcome. Send me your charts, and I'll have a look at them. But a lot of practice makes you a good Fibonacci trader. Thank you, Simon.
Sorry, I had to unmute myself first. Ladies and gents, if you've got questions, drop them in the Q&A box. Couple come through already. They're kind of convoluting on the same sort of space. Warren, do timeframes make a difference? Is it better with longer term timeframes or shorter timeframes? And what about volatility? Is that a big issue?
Volatility is what you're looking for. If you have a careful look at these, they're all spikes. Especially on Forex and the Wallsy, these levels are often just spike points. So what a lot of traders do is they actually put an exit order in the market at an important fib level.
Gotcha.
So you can actually say, well, if it does break that support, I can just put an exit order in at 138.2 and take the 150 pips or whatever. So time frames are important. If I go to a smaller time frame, I get different fib levels. So the best thing to do is take two time frames, a bigger time frame and your trading time frame, and that's where you draw your fibs. If I go down to a 5-minute chart, I get a very different picture. The fibs still work here, so if you do trade 5-minute charts on currencies or indices, you can do exactly the same thing, and you can see it's totally different price action.
Yeah.
Because I can almost put money on that if I drew a fib from this level. From that swing high to that swing low, I'm going to get something in the future. And there it is there, 138.2 extension.
And it comes to the point
there's no price action, a bit of consolidation.
But it comes to your point, is do the fibs in the time frame that you trade. If you're an hourly chartist, then do it in the hourly. If you're daily, do it in the daily. You also said step up a level. So if you trade the hourly, maybe also look at the 4-hour. If you do daily, maybe also look at the weekly.
Yeah. That's it.
And then another question coming.
Sorry, just another point. Sorry, just a quick point. If you take any consolidation, a chart pattern, use the fib, draw it from the bottom of the console up to the top of the consolidation, and you can use the fib extensions as targets on the breakout. Especially that 161.8 level, that works really well.
Gotcha. Question coming in via Twitter saying, does it matter? Does it work across different products? For example, FX or commodities. And again, it's a chart to chart. As a chartist, you're not really worried about what the chart is representing. So you could use a fib on FX, indices, stocks, etc.
Yeah, what you can get, shares very often don't like the 78.6 level. They prefer 61.8.
Okay.
But that doesn't mean they don't hit 78.6 or 89. But they tend to move between 38, 50, 61.8, and that's a liquidity thing. The Forex markets and indices, they will hit every one of those levels.
Yeah.
So they can stop at any one of those levels. So there is a little bit of different markets have different, different vibrations.
Gotcha. Stefan's asking if you draw a fib from your high to your low, does it matter how long that the time was that it took to get from the high to the low?
Yes, it can. That's a whole day on its own to study time, Fibonacci time analysis. But the relative idea is that for instance, a flag shouldn't be more than 50% of the time it took to make the pole.
Gotcha.
So if the flagpole took 100 candles, the pole shouldn't be more than 50 candles big. The flag shouldn't be more than 50 candles big. So you can separate your candles into fib numbers, exactly the same ratios. None of the fib time tools work properly, so don't even go there. You have to actually calculate it manually.
Okay, gotcha. I didn't even know that time was a matter, an issue in fibs. Folks, I'm going to leave it there because we are bumping our time. Video will be up tomorrow because I'm still in Cape Town. In fact, it'll be up on the weekend. So let's say weekend for the video. And of course, Warren will be back again in June. I had to remember what month we were. Warren, really appreciate your time. Ladies and gents, thanks very much. Cheers all.
This webinar is proudly brought to you by IG South Africa. Visit igmarkets.co.za to open your trading account today.